a positive start for the Hang Seng. It's trading with gains of over 1%.
Our poll indicated that the GDP may have grown in the April-May-June quarter by 6.8%.
And we're a fast company, so we take a call to go public. We go public very quickly.
Daily upper Bollinger Band, we are headed there, 25,300 or so.
The stock level as far as sugar in the country is concerned is adequate.
This is actually a very high liquidity net inflow event for Indian equities.
25,250, 225. That's about 1/3% higher.
Five eyes are willing to buy anything if you offer them a 3% discount. But if you ask them to come into the market, they don't like it.
Markets continue to inch up. This is the 11th straight day of gains for the market. The Supreme Court is going to hear the curative petition filed by the company on its AGR due.
जनधन बैंक खातों ने भारत में कमाल कर दिया है.
All four indices, the Nifty Bank, mid cap index, small cap index, all of them trading well in the green.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Nigel D'Souza. And Surbhi, slow and steady wins the race, right? This is the 12th consecutive day of gains for the markets. This week we've seen the Nifty rally 1.7%. And I think the hallmark over the last few days has been the lack of volatility. It's been so steady for the markets. You know, we have that little bit of a gap up opening. We build on it. In fact, the India VIX too has now fallen to levels of 13.5%. So there has been a decline in the VIX. So steady and, you know, positive every day.
No, not a bad week at all, Reema. Yeah. In fact, for the week as a whole, the large caps have put on well over 1.5%. Mid caps were underperforming in the the earlier part of the week, but today that trend has turned around. So, you know, people don't have to complain because the mid cap index is showing a nice outperformance after several days. It's up with a gain of about 1%, whereas the Nifty is tracking a gain of just about 0.3%. Now, of course, I mean, from a trading perspective, traders will nitpick and say this is not a great day because we've not built on the opening gap. So if you look at the Nifty, the graph has virtually been unchanged. So the bulls have not had a chance to, you know, participate in any uptrade, so to speak, at an index level. But you look at stocks. I mean, today, for instance, has been all about sugar, and a lot of those sugar companies are still tracking and retaining a bulk of those gains. So whether it is your Triveni, Dhampur, Renuka, Balrampur, so, you know, whoever got the positioning right ahead of the event has been really smiling away because sugar has turned out to be a pretty sweet trade over the last one or two sessions. Back on the Nifty, some of the gainers include names like the Bajaj twins from the financial services space. They've had a good week, actually. Quietly but surely, Bajaj Finance, today's gain is 2%. Now look at the weekly gain on Bajaj Finance. After a long time, 6-7%. There's money shifting here, and that's something that you cannot ignore. Even on Bajaj Finserv, for that matter, I mean, today we're looking at a gain of 1.5%. 9% for the week. That's the gain. So again, for me, this week has been about a little bit of a shift in positioning, more towards sort of maybe a little bit of a portfolio rotation, more towards large caps, towards some of the underperforming names like the ones that we've just highlighted, and perhaps some trim off in, you know, the areas of your portfolio where you have seen good profit. But all in all, I guess not too many people would be complaining with what we've seen today or over the week. Hi, Nigel.
And if you end in the green, it'll be what? Which day of the winning streak?
12th.
12th, right?
Yeah.
Never seen it before.
At least I haven't seen it.
It's never happened. Yeah. It's happened in 1993 last time.
Okay.
Wow,
so that's 3 decades back.
Yeah, that's a start. And on Editors Roundtable, I'll get further into that as well. We've never seen 12 sessions where the Nifty ended higher. The last time was 1993. We had, we had 11. That was in 2007. But after that, we know what happened. So,
no. Nobody would want to remember that.
So this time it's 12, right? It's 12. And at that point of time, the base, 93, the base was 800 points. The Nifty, which we have done in the last 12 sessions. So the base very different. But let's see how that goes. We'll put out further details with regard to that winning streak that we've seen later on in Editors Roundtable. For the time being, let's tell you how you position yourself for the final hour of trade. Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. Good trading session if you're on the bullish side. What are you doing? Taking some money off the table? Want to have an easy peasy weekend, or are you riding your luck? Can you believe the market's good for more?
I think as of now, yet not booking profits because, well, there's no sign of weakness. And the good thing is that today, the Bank Nifty has started to participate, so that's kind of giving me confidence of carrying the positions. We have had some buy calls on banking stocks earlier. Right now, I have a buy on Oberoi Realty with a stop at 1755 and look for a target of roughly around 1850, 1860 to begin with, and then we can eventually look at higher levels as well. And the other stock which I like is Ramco Cement. We already had a buy on Shree Cement. So Ramco is on the verge of breaking out. So this is a conditional buy. Wait for the stock to get past 830 and 840 and then take a 10, 12 point kind of a stop. So let's say 828. Look for a target of 870.
Mitesh, hi, afternoon. What about Bharti Airtel? That's been a good mover. It's up 1.5% today. This week it's seen a 5.5% gain. Does the chart suggest upside?
Which stock is this? Sorry?
Bharti Airtel.
Yeah. So on the charts of Bharti, I think, my sense is that the stock has had a very good run-up, which has been continuing for many weeks now. There will be more upside because the stock doesn't look tired as yet. And it's, come out of the overbought situation when it was in consolidation between July end to about mid of August, third week of August. So I think this looks like a fresh rally. There is some call concentration at 1620 or strike, but I think once it clears that, good chance that we are looking at a 1700 kind of a target. So add on declines rather than buying here. If somebody has it, hold it. But if somebody wants to enter a fresh, anything closer to about 1560, 1555 would be the entry point and keep a stop below 1520.
Yeah, all right, Mitesh, got that. Thanks very much. We'll come back to you in just a bit for some more ideas. Let's kick things off then by focusing on a couple of individual stocks. And the first one on our list is AU Small Finance Bank as well as IndusInd Bank. Now, both of these stocks are in focus on the back of fresh brokerage updates that have come through. Abhishek is here with the details. Abhishek, take it away.
Well, to begin with, AU Small Finance Bank, the stock is up more than 8% in this week alone. There was a conference of Citi wherein, they did mention that they'll apply for universal banking license in September and no excess incremental cost except the name change and brand building. This was earlier guided to be by August in the analyst call that they had after their results. However, just a 1 month transfer over here. They have retained the credit cost guidance at 110 to 120 basis point for FY25, despite the fact that you are seeing stress building up in the MFI as well as the unsecured loan for the industry as a whole. They are confident that they can double their loan book in the next 3 years, and the net interest margin has been guided for 5.7% to 5.8%. In FY25, they had recorded 6% in Q1 of FY25. So, 2Q MFI behavior is similar to first quarter, and they have guided for ROAs of 1.6 to 1.8% for FY25. Remember that a few days ago, large block took place in AU Small Finance Bank, wherein FinCare Business Services, they sold about 1.72% stake at consideration of 630 per share. So the deal size was about 800 crore. The biggest buyer in that block was DSP Mutual Fund, who bought about 1.39% stake in the company. Now, FinCare Business Services is the promoter entity of FinCare Small Finance Bank, which was merged with AU Small Finance Bank. On the other hand, IndusInd Bank, Motilal Oswal note is there, wherein they mentioned that the board is likely to submit Mr. Suman Katpalia's name to the RBI by early of next month, that is September, seeking a fresh 3-year term for the current MD and CEO of the bank. So the recent approval for setting up a wholly owned subsidiary, that is AMC, reinforces confidence in the bank by the regulator and keeps IndusInd Bank hopeful that, Suman Katpalia might get a 3-year term approval from RBI. So further, no penalties have been imposed on the bank by RBI so far, and management is also expecting an approval for the stockbroking arm within the next 3 to 4 months. If you take a look under Mr. Suman Katpalia's term from, Q4 of FY20 to Q1 of FY25, the deposits have grown by 4% on a CQGR. This is for cumulative quarterly growth rate that you have seen, and advances have grown by 3% on a CQGR basis. Current term of Sumant Katpalia will end in March 2025. Market share is the key highlight, which under his tenure has increased. Deposits market share has moved from 1.49% in FY20 or Q4 of FY20 to about 1.88%, and advances, their market share has improved from 1.99% to 2.12% X of SDFC Limited for the industry. That is what I have taken into calculation. In terms of key ratios, gross NPA ratio is down by 43 basis points under his tenure so far. Net NPA ratio down by 31 basis points under his tenure. Net interest margin has remained flat. However, return ratios have improved drastically. So ROA has increased to 1.7% on a quarterly basis from 0.4% that was there in Q4 FY20, and ROE has improved to 13.5% from a lower single digit that was there in Q4 FY20. And the best part in the balance sheet is the reduction in risk. So risk weight asset to advances ratio, that's declined from 125% when he took over to right now about 112%. Back to you.
Okay, all right, Abhishek, thank you for that. So those two stocks in focus, and AU Small Finance is the one that's really flying away on the back of some of those upbeat brokerage sort of points. Let's welcome in Prakash Diwan. As always, it's Friday and he's joining us on this leg of Closing Bell. Prakash, good to have you on. So actually, I wanted to start off with financials in any case. Some of the names that Abhishek has taken, share your thoughts on that. Or also the Bajaj twins, right? Finance and Finserv. There's some very steady buying that's come back to these two big stocks this week. Your thoughts?
Good afternoon, Subhi. So I think let me take the banks first. Out of the two banks, of course, AU has enough traction and there's enough news flow to back that. But I would cautious with most smaller banks. In this end, of course, while it's small enough, it's big enough. It's at the same time small and big. Bank. So the way they operate, they could be slightly more nimble in terms of deposit gathering and lending aggressively. But at this point in time, all of the goodness is fully priced in most of the smaller banks. The Bajaj twins is clearly all pivoting around this the housing finance business getting listed. So that there is so much of anticipation, and given the kind of response that you are getting on good IPOs, there is no reason why that value unlocking will not be very real and significant. So that's probably what the market is looking at. But from a loan growth perspective, AUM, I think there's nothing very significant happening in terms of incremental changes. So I would be a bit skeptical allocating more money at these valuations even to the Bajaj twins. So, the market's giving you a very clear signal. Look at the mutual funds which are sitting on more than 10% cash, almost 10% cash in the equity funds. Look at HNI behavior. Each telling you that we will get opportunities if we are slightly more patient. We've been patient for quite some time. Especially with financials, it will be a very good time to buy when the book value the price to book value ratios start contracting to slightly more realistic levels. But at this point, none of these names really would be worth adding.
Okay, let's get to the other big story, and that's the rally that we're seeing in names like Radico Khaitan and United Spirits. The news here is that global major Pernod Ricard has reported their numbers, and what's the read-through for the Indian liquor stock spirit companies. Vivek joins in for more. Vivek.
Well, that's right. So Pernod Ricard overnight, actually went ahead and delivered as well as gave commentary as far as the FY24 results for them were concerned. Their FY24 ends in June of every year. So first up, let's look at what they're saying about their own Indian operations and how it's performed. Top line growth of almost 6% for them, with mid-single-digit growth as far as the price as well as volume mix is concerned. They're saying that strong, broad-based and accelerated performance was underpinned by strong consumer demand, and they are saying that sales for them is headed towards the premium segment. Now, as per analysts, the key read across for this is the fact that it appears as though the two listed players in India, number one United Spirits and number two Radico Khaitan. Remember, United Spirits saw 10% growth as far as the prestige and above segment is concerned. Radico Khaitan saw slightly above or higher than that as far as the P&A was concerned, compared to Pernod Ricard's 6% top line growth. indicating that there has been market share gains as far as United Spirits as well as Radico is concerned. On the back of that, we're seeing both of the stocks today doing quite well in the session.
Thank you very much for that, Prakash. Right time to discuss, stocks like United Spirits and Radico Khaitan, but looks like market share gains continue.
Oh, absolutely. Friday evening, and this seems absolutely in place. So, I think the United Spirits growth trajectory that we've seen in the last, let's say, about a year and a half, very clearly is working as planned. There's nothing which is kind of surprising. There's nothing which is abnormal in terms of, not being able to attain. They set out for debt reduction, rationalizing the portfolio, and we've seen the results, right? The premiumization path and all. I think United Spirits will be able to finally catapult into a very large setup here in India once the global, this with Diageo, this whole FTA and all those talks that have been not going off as expected with the United Kingdom. Once that is in place, there'll be a lot of, potential for these guys, optionality for these guys to be able to scale up and export from here. And I think there is a very clear edge that they have over the Radicos and over the Pernod Ricads or the market, because their portfolio is actually now getting into very high margin. Whatever they sell, they make almost double the margin that they used to sell, let's say, 2 years back. So very clearly, every top line growth trigger is actually going to translate into a very veritable trigger on the profitability side. Very positive on this. My target for United Spirits a year back, I mentioned when it was about 770, was about 2100, and which was almost 3x from there. And I still stick to that. Only 1 year's lapsed, got it doubled, but you still have a long way to go. Another 50% kind of an upside. So I wouldn't be surprised if it actually attains that in the next 12-18 months.
Prakash, topical, right? I mean, when you were talking about a lot of stuff out there, my imagination was going wild. But that we'll save for Friday evening. Let's talk about Orient Cement. The street is expecting a deal to take place. A lot of chatter, a lot of buzz. I don't know how many people told me handshake is done next 2 days. It's been 2 months actually. So we're waiting for that deal. Appears if there was a deal, then there could be some bit of a delay or could be off. We don't know. But the stock at 400 rupees, maybe 380, 400 rupees, the upside was limited. But at around 300 rupees, how do you view Orient Cement? Because it's a good asset. It's a good asset. They've got expansion potential as well. And on the cost side as well, there are a lot of levers in place. So at around 300 rupees, it's trading at around $85 per ton, which is, much better than the 110, 115 that we saw, say, 45 days or so ago. Your view?
No, you're absolutely right, Nigel. At $85, you probably have another 18-20% as compared to the last reasonably, priced transaction that happened. But there's no reason why it should also get $100, because it's the question of who's the acquirer, how much is the the desperation for the acquirer to add size to this thing. So I'll tell you what I have realized is in the cement side, because there's so much of an M&A expectation building up, Nigel, it's not the acquired or the target companies that probably will help you make money. It is actually the ones who are acquiring who will be benefiting, because they are finally getting into a scale which gives them a lot of weightage and muscle in terms of pricing power as and when it looks up. So I would still look at the larger ones who would potentially acquirers of these smaller units. If you had to look at smaller units, you could take a standalone like Digvijay Cement or something, has very good metrics, but it's too small. So, and then they don't want to sell at any point in time. So it's a off M&A kind of a bet. But I would go with the Ambujas of the world, the larger ones, not Ultratech maybe because it's already run up so much. But Ambujas to me still looks extremely promising.
Okay. Prakash, before we went to cement with that detour, I was going to ask you that since we're anyway talking alcohol, let me ask about ethanol, a variant of the alcohol, right? Because that's been the trade today. Now, on a serious note, I mean, the sugar stocks are absolutely going through the roof. The distillery guys, the basic sugar guys. But the issue here is that typically sugar ends up being a great trade for 2-3 days and, then it completely fizzles out. But what do you think? Are the dynamics a little different this time? Because we're getting in the festive season. There's still some hope that maybe exports will be opened up as well. would you looking at adding any sugar, not to your diet, but to your portfolio?
No, absolutely. So just to clarify, ethanol is not as close to alcohol as the ENA is, and interestingly, some of these companies are also into that, the extra neutral alcohol, which gets completely used as mother liquor for making the bottled liquor. But
see, there's a connect. That's what I was saying. There is a chemical connect.
No, absolutely. The chemistry is the same. So you will have a CHO4 molecule doing the magic. But the whole thing is the sugar business, which went through a little bit of a slump given the election phase, then this whole thing of inflationary impact on sugar. But what has changed is Brazil has, for the first time, seen a lot of forest fires that have brought down the potential crop that you'll see in this harvesting season. Last time it was, more of drought and all that. This time it's a different calamity. And the other thing is that we are sitting on a surplus. So at some point in time, if the export prices remain firm, they are firming up with every passing day, there will be an impulse to allow the excess sugar to be exported without impacting the domestic prices. Festival season is a bit of a sensitive phase, but this trigger that we've seen on alcohol, this thing, and even, by the way, rice, from FCI has been allowed to be used for generating ethanol, volume. So there is a very clear focus on ethanol, which I think will sustain for the next couple of years. I would definitely believe sugar, the cycle is here to stay for at least 12 to 15 months. If not, this time it's not going to flatten to deceive and just, whimper off in just about a week or month or so. I think it's much longer. So you look at the bigger ones, look at an EID, apart from sugar, it has the holding in Coromandel. So, there are these good setups which you could de-risk yourself from in terms of the cyclicality of sugar. But there is a positive change that's happening in sugar, which I expect could sustain for the next 12, 15 months.
Prakash, thank you very much for joining in. By the way, something's cooking up in Paytm. 13% up on that. Very large volumes. That spike has come in only in the last 1 hour. And GSPL, I think that's another stock which goes up day after day. I think, Nigel, you need to do a record check on GSPL too. Today it opened down. It was down 4-5% at opening, and now it's up 4-5%. And again, pull up a 1 month chart and you would see.
For the week, 30%.
For the week, it's up 30%, but the rally started even in the prior week. I think it was on Nimesh's D-Street chatter earlier this week at some corporate action, some sort of, I think that the street is anticipating. That's the 1 week chart. But as I said, the rally is extended now for, more than that. We will slip into a very short break on that note. On the other side, we'll invite Vinay Jaising, MD and co-head of Portfolio Management Services at GM Financial. Stay tuned.
back. It's been a good week for the bulls. Fresh highs on the street and more gains that seem to be intact, at least for now. Let's welcome in our next guest on the show. We have Vinay Jaisingh, MD and Co-Head Portfolio Management Services at JM Financial with us. Vinay, thanks so much for joining in. Great to have you on. So finally, the August roller coaster is ending, and it's ending on a rather good note, right? After the big 5th August Manic Monday scare, we've come out virtually unscathed, all-time highs. So what do you make of the market and its resilience at this point?
I think a couple of things. First and foremost, the question you'd asked us last time, how much is the cash in the system which mutual funds have? A number of 5% or 150,000 crores. That's a big number. So as SIPs keep on growing, even if you look at a SIPs number on a gross basis, 40,000 crores, it's as good as saying you've got 4 to 5 months of stock and trade in terms of cash, which you can use and deploy in the market. So despite FIIs virtually going to zero FITD by taking out money in the last, I would say, 4 to 5 months, you've seen domestic inflows of as much as $5 billion. So that's, I think, the first big positive. The second big positive is as you're seeing the interest rates of US coming down, as you're seeing the 2-year and 10-year chart of US go to 3.8, 3.9% levels, you're realizing that the rest of the world will have a slowdown. And on the other side, the PMI numbers for India are inching up. So with an economy perspective, India is singing. If you look at the third parameter, the quarterly results which came out, there were not too many bad results which came out or, underperforming results which came out. So overall, India Inc.'s profit growth also was relatively strong. So, if you're singing on all the 3 counts, that's only the 4th count left, which is valuations, where, on a relative basis, you're trading at about 21 times 1 year forward. I'm talking about the Nifty 50, which is a little above the last 5-year average. But if the earnings momentum were to grow, India is looking as a much safer haven than the rest of the world.
Okay, all right. Hi, Vinay. Good afternoon. Good to see you, Vin. Vinay, what about on the headline index? You don't shy away from giving us a target out there. We've had a good run. How much more is in the offing, say, in the next 18, 24 months?
So if the earnings are going to grow as much as, I would say, over the next 24 months, as much as 15%, we think the upside could be as much as 10 to 12%, purely, looking at an earnings perspective and a PE of 22 to 22.5 1 year forward. So marginal PE expansion, I don't see the PE expanding more. The earnings will have to be the driver. But here, Nigel, I would be a little more concerned because the rest of the world, the headwinds are a little bit stronger currently. Remember, the Japan carry trade is going against liquidity for the rest of the world, especially US. You've seen the Japanese currency appreciate by as much as, 160 has gone to about 145, so as much as 15% odd. So you're now not going to get free Japanese money or cheap Japanese money to deploy in the rest of the world. So that's going against you. And what I expect is a little bit of a toppish market world over once the interest rates in US get cut, and which could happen in the next month. So in the shorter term, I would say, volatile to marginally down, but 12% upside in the next 12 to 18 months, purely driven by earnings, I think is our base case.
The bulls will grab that after the kind of run that you've seen. Still, you get a double-digit returns. That'll be good. But earnings, as you said, that's going to be prime importance. Let's focus on the way your portfolio is constructed. As I look at it, as of now, still mid and small caps, I think they are 60% of the total AUM that you manage, while 40% is large caps. Do you think that turning around? Because now the talk is you'll find more comfort in large caps. So that's not stopping the mid and small caps from running away. So would you reconstruct it?
So, we talk about this question every day. And, what our analysts remind us is in the last 10 years, at least 3 stocks have got added every year into the large cap, which were small caps. So out of the 100 stocks which were there in the large cap in 2014, 70 of them are same and 30 of them have been small or mid cap companies. You can mention a lot of them, including Trent or Varun, which have entered. So, we are more interested in finding out which are those 30 names which will enter into the large cap. Also, when we are looking at the definition of small cap, we are saying 250 plus companies in India are large. That's 100 plus 150 large and mid, and then everything else is small. But the actual definition of small cap is $3.3 billion. Now, in which state of imagination can we believe $3.3 billion is small cap? So if you look at our portfolio between 3.3 and let's say $1.5 billion, which earlier used to be mid-cap to large cap. I'm just talking about 6 to 8 years ago. We've got a lot of stocks coming there. And most of the ideas we're getting where the growth is, let's say, north of 20%, are happening in the mid and small cap. So we're not making it by virtue. It's just happening because of the new stock ideas we're getting or where the traction of growth is stronger.
So which are your top bets in that so-called small cap category as we classify it? What would your top bets be over there? And have you done any churn in your portfolio over the last 1-2 months? Because so many stocks have done so well, and by virtue of that, you may want to pare down your holding in it.
No, absolutely. We've gone down a lot in defense and railway. We're virtually out of railway into our portfolio. Defense and railway were north of 15% in our overall weightage in our portfolio at one time. We've replaced them with pharmaceutical, specialty chemical names. And again, some names, which are, I would say, CapEx related, and some housing names. So this is, where we've done it. So now our incremental weightage in specialty chemicals and pharmaceuticals have gone substantially higher. We are north of 10% in that space, closer to 13-14%. Capital goods, we've replaced some of the names, which newer names. So, with defense and railway going in, we've got a couple of infrastructure names, an interesting name in metal as well, which we've added into our picture.
Which one is that? Which one is that, Vinay? I can see, metal related. There's Venus Pipes, which I think you have been riding for a while, and Gravita, the recycling play. I can see both of them. Tell us more.
Yeah, sure. We like both these names. Our analyst Mukund has got them smack on right. God bless him. As far as Gravita is concerned, the recycling play is amazing. Just think about it, right? Today, when you're using lead, for batteries, you need to use recycled lead. And there are very few companies which give you recycled lead, and coming from all the way from Africa into the country or going into Europe. So that's one part of Gravita's play. The second more interesting part of Gravita's play is it's using what it's learned in lead into lithium ion and also into aluminium, and moving forward to using it into plastics. Having said that, the company's got a guidance of like 35% PAT growth 24 to 27, and we think the company would beat it. Its return ratios are also pretty impressive at north of 25%. So we clearly like Gravita. As you said, Venus Pipes, again, Venus Pipes is something which is very strong in the stainless steel pipe and tube industry. It's getting its act right on the infrastructure play. Again, here our focus is, do we see a volume growth of 30% in the company? The answer is yes. Will that lead to, because of leveraging, a north of 40% growth in the earnings? The answer there too is yes. And the company is FCF positive. So keeping these in mind, at 25 times 1 year forward P, we like Venus Pipes as well.
Interesting, both interesting plays. And of course, Gravita has had a phenomenal journey as well, right? Stocks almost trebled in the last 1 year. So yeah, it's been quite the mover. But Vinay, as you were discussing what's gone up in the portfolio and what's gone down, what you've trimmed, in all the conversation, I don't hear financials anywhere. So what's the sense? What's the positioning now? Because there is some interest and some money definitely coming back. I mean, look at what Shriram Finance was doing a couple of days back. We were just discussing the Bajaj twins, Bajaj Finance and Finserv, very, incrementally small, but very steady moves, 8-9% up this week. So it seems there's some portfolio shift going on. But what's your stance?
So our perspective, we are underweight the financial, both lending and non-lending space. We're between 16 to 17% as against, the market numbers of 25 to 30%, depending on the index you're talking about. Out here, we like housing finance names, apart from ICICI and Axis. The housing finance names which we like are Chola Financial and India Shelter. I think, the government has shown you in the budget, the action is going to be a lot more in housing, the way they've increased the PMAY volume growth. In the case of Chola Financial, you also get the advantage of, being the holding company. So bigger discount on Chola investment, in our analyst Pooja's numbers. Chola Financial Holding is trading, trading at a 45% holdco discount. So we think sooner than later, the holdco discount between Chola Investment and Chola Financials will also reduce. So Chola Financial has a bigger edge there. On the other side, India Shelter is trading at about 2.5, 2.6 times 1 year forward book. Again, both of them happen to be mid and small cap companies, not large cap. So, if I may say it, my apologies. But, we're seeing a lot more earnings growth trajectory coming in small and mid cap, even in the financial space than in the larger banks. But yes, valuations for the larger banks, are way below their last 5-year average, be it HDFC Bank, Axis, or Kotak. But here we are betting more on ICICI and Axis Bank.
Got it. Vinay, before we let you go, just to what, you were discussing Gravita and sort of recycling and all, got me thinking about all things green. So have to get your take on Ola Electric. What's been the house call here, given the run-up in the price?
So, as we had said it even last time, if Ola Electric does well, TVS will also do well. So we're looking at everywhere where you got a cheaper, stronger company, which has shown what its history is all about. And so we are playing, Ola Electric in the form of TVS. Touchwood, it's a large cap company. It's relatively cheaper than its past. The company's EBIT margins have moved up from 6-7% to 11-12%. And, we're pretty excited once rural growth comes up, the two-wheeler space. So, TVS ticks all the boxes out there.
Vinay, we'll leave the conversation here for now. Thank you very much for joining in. Enjoy your weekend. We'll slip into a break. On the other side, we'll get a check on what dealing rooms are saying in our segment D Street Chatter. Also, a few BTST calls for the weekend.
Welcome back. Well, markets still holding with gains. On the Nifty, we've come off mildly from the top, but otherwise it's a good session. Par for the course. First day of a new series, and we're starting off in the green. But Nimesh joins us. He's going to give us further insights into what he's picking up. Nimesh.
Hi, Nigel. If somebody would have told you that India is going to see an inflow of over $4.5 billion and the Nifty and Bank Nifty both are less than 0.5% higher, I would say it's a bit of a disappointment day, frankly. And that explains that maybe there was a bit of anticipatory move in the last few days in anticipation of this big inflow. There was a bit of pre-positioning as well. I think that's the way to read today's market. Apart from the MSCI flows, there was hardly much as far as flows are concerned, but there is a small MOC, is what I understand, in select stocks at a leading FIS in today's market. I guess the better way to read is the fact that the broader markets have done well today. The mid-cap index is up almost 1% now. So that's the space where seems to be a bit more action than the broader market, than the large cap names today. So a big liquidity event day seems to be out of the way in the next 30 minutes or so. But I guess a bit of disappointment, so to speak, the fact that despite such a large inflow, the market's not reacted very sharply.
Yeah, I guess that is true. Market has taken it in its stride. And even something like HDFC Bank, which is going to get a bulk of that money, that stock's also turned negative, at least for now. But Nimesh, as always, I know you've got plenty of chatter. So what are the stocks that you focused on today?
Well, so the first stock on my list is Paytm. Big move in that stock. Last when I checked, the stock is up 13%. And actually, surprised a lot of experts as well as to why the stock is buzzing 13%. One reason is that what we saw a couple of days back, the Ministry of Finance approval, that suggests that the regulatory overhang is likely to reduce from here on. But the bigger thing to watch would be a large block which can come in Paytm very soon. I understand one of the strategic investor is likely to sell out, so it will be a clean out trade from that investor, and that's what the book is getting built in the days to come. So expect a large block very soon is the indication as far as Paytm is concerned. The second stock is Nirlon. There is a large block in pre-open, 7% equity got change hands. I guess the disclosure will be quite interesting as to who bought and sold. But I was just looking at the shareholder list. Some impressive holders already in the stock now. There is ICICI Pru as well as Nandan Ninikini. They own a large chunk in that particular company. The third stock is Vedanta. Again, that's buzzing in trade, a bit of commodity play as well. But I guess the management has been meeting a lot of institutional and HNI investors. A lot of HNI investors met them yesterday, and it seems like the demerger is on track and the value unlocking is on track. So that's the reason why there is a lot of excitement in Vedanta today. The last is a couple of the OMCs, HPCL and BPCL both. There's a Morgan Stanley note and they've raised the target price in most of these names. But in general, for the last couple of days, there is very strong FI buying in the OMC names. So the stocks are not reacting for the last few days, but at least from a delivery point of view, expect high delivery volumes, and there is a very strong buy flow in all the OMC names today.
Okay, thank you for that. But GSPL, Nimesh, that's a stock that you had highlighted earlier this week, and that stock continues to move up. What have you picked up? Any latest on that corporate development?
Well, Rima, so last when we spoke, when I put it on the chatter as well, the anticipation was that maybe you're going to hear a very large corporate development in GSPL very soon. Since then, the stock is rallied 10%. Even in today's market, the stock is up 5% on large volumes. The feedback or the understanding is that maybe you get to know the announcement in the next couple of days, maybe this weekend as well. Essentially, the feedback is the corporate development will lead to a potential dismantling of the holding company structure as far as GSPL is concerned. So I'd explained last time as well, GSPL standalone business plus they hold stake close to 54% in Gujarat Gas. Now, if you look at Gujarat Gas market cap and the current GSPL market cap, of course there is a holdco discount. So if indeed there is a deal which just breaks away the holding company, then the holding company discount will vanish. I guess that's the reason why the city is anticipating this move, and hence you've seen a big move in the last 1 week.
Okay, thank you very much for that. That's GSPL. Mitesh is now back with us for a few BTST calls that you can reverse on Monday. Mitesh?
Yeah. BTST and TVS Motors, after about 5 days of consolidation, the stock is picking up. So keep a stop at 2,800, look for targets of 2,850. And buy on HFCL, that's not a company which I typically recommend, but it's been making newer highs and still looks good. So buy with a stop at 147.5 for targets of 160.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Hemang Chani into the conversation. Hi, Hemang. Good afternoon and good to see you. Well, I wanted to know what you make of the telecom stocks. There's that AJR verdict which the street is a little bit hopeful about. Bharti Airtel has taken off in today's trading session. How would you approach the space?
So good afternoon, Nigel. Thanks for having me. So there are two things that we need to keep in mind. One is that in case of Bharti, there is going to be an MSCI related flows And apart from that, as we all know that for Idea, the verdict on the AGR is likely to come about. And if there is any favorable verdict for Idea, then our understanding is that some of the incumbent players, particularly Bharti, would also stand to benefit. And you're seeing that within the entire pack, Bharti has been able to display a much better ARPU and much better operating growth. The peak of the capex is behind. So there is a definite amount of interest in Bharti at this point of time.
Any thoughts on GSPL? It's seen a 30% up move, Hemang, so far this week. I don't know if you caught what Nimesh is saying, but where do you stand on GSPL?
So GSPL, Rima, if you recollect, there was a PNGRB order a few months back, which was, on the pricing of the peak pricing, prices of the gas that the company would possibly get. So what is happening is that you might see some relief coming through from the regulator on that pricing cap front. Apart from that, when you look at the holding company structure of GSPL, because of the stake that they have in Gujarat Gas, about 54%, and the way the Gujarat Gas stock has behaved, there is a certain amount of, additional SOTP-based valuation that they are getting. And, overall, the sentiment towards the entire sector has improved, particularly GAIL, because of the higher, the more reforms that the government may announce. So GSPL is a very unique play. If you have any positive relating to holding company structure, then I think there can be some re-rating of the company.
Okay, so let's see how that plays out, because it's anticipation of the corporate announcement. It's really got the market super excited. Hemang, hi. Speaking of corporate changes and announcements, Tata Motors is in sharp focus as well, right? The DVR is getting extinguished. Yesterday, the stock rallied quite a bit. Any advice here on how to go about things till we eventually get into the demerged entities?
So I think DVR-related, news already is known to a large extent, factored in. I think people are positive on the entire, space. Mainly because of the way there is a bit of a revival in the PV space, CVs holding steady. Also globally, if you look at JLR, as against the earlier expectations in the management guidance that this quarter can be subdued, the actual data point suggests that in major markets things are looking quite strong. So I think the stock is reacting to that development.
In fact, let's talk about the auto sales numbers, which are expected for the month of August later on tomorrow over the weekend. Sudarshan now joins in. Sudarshan.
So auto companies are expected to report sales for the month of August on Sunday or coming Monday. And overall volumes, as per analysts, are expected to remain tepid. We may see two-wheelers and tractor segment doing relatively better than passenger vehicles and commercial vehicles segment. And reasons for this underperformance can be two reasons. First, increased in commodity cost. And second is that commodity cost, like for passenger segment, has increased 20 bips month on month. And for two-wheeler segment, it's up more than 100 bips month on month. And as per analysts, even inventory levels are elevated at 40 to 50 days, which they believe can normalize as demand picks up in festive season, as this time festive season is little longer than what we had last year. Now talk about positive factors. There are two positive factors. First, rural sentiment is turning positive, and second, monsoon rainfall so far has been 7% above normal. Considering all the factors, in two-wheelers, Bajaj Auto sales are seen rising 10% year-on-year and 11% month-on-month. Hero Moto sales are seen flat year-on-year and up 16% month-on-month. For TVS Motor, sales are seen rising 10% year-on-year and 8% month-on-month. Royal Enfield sales are seen falling 6% year-on-year and 1% month-on-month. In four-wheelers, passenger vehicles and commercial vehicles, Maruti Suzuki sales are seen falling 5% year-on-year and expected to be flat month-on-month. M&M Auto sales are seen rising 2% year-on-year and down 1% month-on-month. Tata Motors and Ashok Leyland may report fall in sales both year-on-year and month-on-month. In the tractor segment, M&M tractor sales may rise 6% year-on-year, but on month-on-month may see a fall up to 12%. For Escort, sales are seen rising 1% year-on-year and 4% month-on-month. So overall, we'll see how the real numbers pan out. But as far as stocks are concerned, most of the stocks have seen rising in the recent past, and even the sectoral index Nifty Auto is trading near record high.
Okay, all right, Sudarshan, thank you very much for that. So we'll watch out for all the auto sector data as it comes out when September rolls on. Well, the government yesterday permitted the use of sugarcane juice and sugar syrup for ethanol production in the 2024-25 ethanol supply year, reversing last year's ban. In a conversation with CNBC-TV18, Executive Chairman of Sri Renuka Sugar, Atul Chaturvedi, commented that the effect of this change will be more visible from October, while Prashant Biani of Elara Securities welcomed the government's steps for the sugar industry. Let's listen in to excerpts from a conversation that we had earlier in the day.
No, in fact, whether we like it or not, all these changes are going to be relevant once the next crushing season is started. Because cane juice, as of today, is not available because crushing is just not there. So I would say October onwards, it should start impacting the operations and operations big time. We are actually looking at an increase of closer to what the maize ethanol price is. Say, for example, as far as cane juice is concerned, which is about 65 rupees a litre, we want it to be jacked up to closer to 72 or 73 rupees a litre. And secondly, for the B-heavy, we want it to be suitably increased to about 66, 67 rupees. So that we hope the government would take suitable decision in the matter. Sri Renuka, we would possibly feel that this year we could be possibly doing more than 20 crore litres. Next could be higher. Next could be higher than that. In fact, our capacity is above 25 crores, and we see no reason why we should not be in a position to achieve that.
Okay, that's the big story. And remember, 10 minutes left for markets to close, but that MSCI-related adjustment is also going to start taking place from 3 to 3:30. And some stocks which are moving around, NHPC is suddenly shot up 2%. Ashok Leyland is seeing some buying, so there is some good up move seen in a couple of these names. We will slip into a short break on that note. We'll come back with more.
Welcome back. You're with us on Closing Bell. And of course, we're still in conversation with Hemang as we get into the last leg. Hemang, the sector of the week really has been IT, right? A stupendous move on most of the stocks. The index itself is up 4%. Individual stocks have done even better. What's your sense? Buying anything fresh in IT now? Large cap, mid cap, anything?
So very interesting upgrades that we've seen come through, particularly for names like L&T Mindtree and clutch of other names. And the sense one is getting is that post the numbers and the guidance that some of the companies had given, the actual data in terms of performances of certain verticals continue to be good. Deal pipeline also continues to look good. So within the pack, what we like in terms of valuations and the growth going ahead are names like Infosys and HCL Tech, because relative to the index they have not really performed, and the numbers and the growth outlook continues to look good. So mid cap stocks have seen much sharper run up, be it Persistent, Birlasoft, and some other names. But there we think that the run up is quite sharp and the valuations are looking a bit stretched. So we would be more comfortable with large cap names.
Hemang, the other chatter this week was the NSE IPO. So we all know that BSE's higher valuations will probably rub off on NSE. But suppose NSE gets listed, what impact will it have on BSE and MCX?
Very interesting question, Rima. My understanding is that NSE by far is the biggest company, in terms of exchange, in terms of their market share, positioning, etc. So while it is unlisted, for some reasons it's quoting at a substantial discount to BSE. BSE would be getting a valuation of about 40-45 times. NSE is, today, based on the current price of 50 to 5,300, is getting a valuation of 26 times. I think given the overall growth across the, segments, we think that there is going to be a positive rub-off both on the, MCX and BSE both, because I don't see any meaningful impact of the, this SEBI measure that may come through. The final report is yet to be out. And there is going to be a huge interest, particularly for NSE, because it is quoting at a substantial discount. It remains to be seen finally at what price they are able to launch the IPO. But I do think that there is going to be a huge interest over there.
Okay, all right, got that. By the way, looking at some more movers and shakers in the market, Godfrey Phillips, the stock has gone up almost every single day this week. And even now, as we're getting into the final stages, 6% higher. That takes the week's tally to 20% kind of a gain. Hemang, any thoughts here? There's a raging family dispute going on out there. The stock's just going up, up and away. What would the advice be to anyone who's interested?
So should be not tracking this one, but typically for the stocks where the floating stock is limited and you have a possibility of some kind of an M&A play or an open offer, you do this kind of action. Since we don't cover it, no really view or comment from my side.
Looks like that pre-positioning in the MSCI-related stocks is really playing out. So despite an expected inflow in names like a Zydus Life or a Dixon Tech, the stocks have actually reversed in the last 10-15 minutes. Zydus Life is down 3/4 of a percentage point. Dixon has suddenly collapsed, down nearly 1%. And HDFC Bank, which is expected to see a bulk of that $5.5 billion of inflow, nearly half of it, hasn't really moved at all. It's absolutely flat. Hemang, any other ideas that you're suggesting to your clients now?
So, Rima, I think overall, if you see, when you look at the numbers and the current setup, 2 or 3 sectors have really surprised in terms of growth. So, be it pharma, real estate, some of the platform companies. So, there is a fair degree of interest in these pockets, given the overall earnings and the growth outlook that one is really looking at. So we are still positive on the names like TVs, also partly because of this MSCI related, flows that one can expect. Also, some product approvals are pending, and we think that, this company is very well positioned. Real estate continues to see a lot of momentum. So something like Godrej Property, Lodha, we think there is some more room on the upside.
Okay. Got it. And before we sign out, Hemang, finally one more stock, and if you have any thoughts around it, given the move. Paytm, we've just been discussing the price surge. I mean, it's up about 13% today. Would you look at it in any fashion? Dinesh was telling us that there could be some sort of corporate developments, maybe the regulatory overhang reduces a bit as well. Any interest?
So, Surbhi, I think the recent, this SEBI-related news, they were already known and there was some reaction. So the stock is actually adjusting to that. And apart from that, if you see the entire, companies with, platform as a theme, they are really catching up. There is a lot of interest. And if you see any M&A related activity or some, relief from the regulator, we have already seen that some approvals they've already got. But, this could be a big trigger for a name like Paytm because of the kind of interest that is there on the platform companies.
Vodafone Idea, by the way, is now at the day's low. It's a 5% cut on that. The street perhaps was hopeful for a up move in the stock, given the Supreme Court is finally agreeing to hear the curative petition on AGR dues, but the stock has tumbled down. But winding down to the day and the week, and the positive run continues for the markets for the 12th straight day. The Nifty and the sensex virtually closing at record levels. It's 25,250 on the Nifty, a 100-point gain. The sensex has an up move of 250 points, closer to 82,400. On the way up, you had strength in names like Cipla. Bajaj Finance has been a big mover this week with a rally of nearly 7%. M&M, Hero MotoCorp in the automotive pack, rally. NTPC, Divi's Laboratory, Bharti Airtel too was a big mover. On the way down, Tata Motor reverses part of yesterday's up move, so that's the top Nifty loser, 1.25% down. And HDFC Bank sulked, so that stock too. A bit disappointing, ending with a cut of more than 0.5%.
It's such a solid showing and such a strong close because the Nifty has pulled back in the last couple of minutes. It's again pulled back to close virtually at the day's high. So that's a solid showing of strength. The mid-cap market has seen a flourish come back, and there's so many names flying around. Torrent Power, 6%. Sundaram Finance, now 7.5% up. KEC International, 6%. Gravita, 6%. NetWeb, 6% is such a long list of winners. Paytm, we just discussed. Radico Khaitan, 7.5% up. So beyond sugar, which obviously was a very sweet spot in the market today, a whole host of other mid-cap names came up with a flourish. So the mid-cap market ending its small little patch of underperformance compared to the large cap screen. So very little to compare to complain about in the market. Bank Nifty down about, up about 0.3%, and for a change, it's actually almost keeping pace with the Nifty as well. So all in all, a very, very solid close to what has been a phenomenal week for the market again. Of course, a close again at fresh all-time highs, 25,246. Well, that's the market action. Again, the bulls in control. That's how August is ending off, and the bulls are entering September in style. That's where the team of Closing Bell takes your leave, but don't go anywhere because our Friday special offering Editors Roundtable coming up next.